Good evening, all. Ira Epstein with your metal market update. And this update is for December 12th, 2024, about 6:10 p.m. Central Time. So a big break in the metal markets today. Why? You know, people will tell you, oh, it's the CPI. It was a little hotter than normal, and that broke down the stock market from where it was. Nah, I don't buy into any of that at all. What it was what I've been preparing you for. China's held its two-day meeting of its work conference, and when it came out, it offered absolutely nothing in the way of details. Now, the reason that this is important is I know that typically it's March where we get the guide, what will come out of these meetings. Here, we're going to set our goals then and then. That's not what's needed right now. Right now, their currency's in a spiral. Right now, the property market's in a spiral. What they've done is not enough, and they could have come out of here and given hope. Instead, all they do is, we're going to offer stimulus, we're going to do this. The details will be, 90 days from now? A lot of chaos can happen in that. And today, the metal markets looked at it because China being a big consumer of the metals, and they punished the market. And that's basically what went on. Now, was it overdone? Maybe. I can see the gold and silver trying to hold up here. But for the moment, the markets had so much of this, just the way you think when you go into a war and you get what's called a war premium. Well, think of it as a China premium. And that was in the market, and they took that out of the marketplace. Tomorrow, you're not going to get much in the way of news. You get the November import-export price data. That comes out at 7:30, and the prices are expected down for import, down 0.2 on the month, and that compares to the import prices, which were up 0.3 after that. Going back to today's CPI, groceries, eggs specifically, got a lot of publicity today. I don't know if you've gone to buy eggs, but it used to be for a nice dozen eggs in Chicago, $3. They're about $5 right now. So yes, it's up, but there's bird flu. There's all kinds of things in there. Does this change what the Federal Reserve will do next Wednesday? I don't think in the wildest way it does. I think the Fed is going to go your quarter point. I think the Fed will not move in January. We will see what they want to do later in the quarter. That's how I think you have to view how that part's going to play out. You backed off in all these markets too, the energies, because again, China is the big consumer and the big dog didn't give us any information. So when we take a look at the gold chart of closes, you can see how you came down, back up. And for in all fairness to gold, for the week, it's still up 1.85%. Yes, it's well off the highs, but it's still there. You came back here, and you and I talked just yesterday. What did I say yesterday? From here to here, you made about a 2/3 retracement. Do you ever hear of a Fibonacci count? Do you know what that even is? You might want to take some of my courses and learn about that. But it was a bounce. It doesn't mean the market's over. When we take a look at the chart pattern, you haven't been bullish anyways. What you've had is a lower low, higher high pattern, period. What else happened? You'll see. The market got to the 18-day average of closes, rallied nicely from it, and where's it having its problems? Right here. So, you know, you'll get people that say, abandon those Bollinger Band ideas, Ira. They're no good. Nonsense. They're very good, number one. Without the Bollinger Band, you don't see why the market stopped there. But with it, you have an inkling. Now, does that mean the market gets bearish there? That is not what Bollinger Bands do. What Bollinger Bands offer you are support and resistance points where the pros might take money off the table at different levels. It can do more than that. It can give you a warning if it latches onto it where you're going. But when you come back to key moving averages, you hadn't hit like you did here. You had to go back months, 6 months, 5 months in order to get it. You look for support at those numbers because that's the purpose of moving averages, to give you an idea of support resistance. So do I think this market is falling apart? Let me go on record. Absolutely not. NOT. Not with the K-N-O-T. I would expect that the market's going to come down here, try to find its footing. Ideally, that's what I'd like to see. And then, like stocks, I think you still have an excellent chance at a big rally into the very end of the year. Gold and silver normally try to rally year end. We'll see if that happens. Momentum wise, let's back off here for just a day or so and get our feet wet. First move up here. Look at how overbought you are. Now, for me, I look at the slow stochastic, overbought into a Bollinger Band. Is this where I would tell clients to buy? Well, you've got all the videos there on YouTube. You will hear me consistently say, no, you don't buy into Bollinger Bands. And you're overbought. And what I like to say is when a market is overbought, by my definition of it, and I share it with you each night, that is not where I think smart money's being deployed. Does it always work? Nothing in life always works, but I'll play the high probabilities of it. And having done this 60 years, I think I know the probabilities. I'll let others want to do that because as it keeps going, they will just say, look at you, missed these trades. Well, all I did is I didn't take on the risk with the trade. There's a difference. Now you come down, and I know you'll tell me, it's just a break. Okay, do you know how much that is in the futures markets? $47. It'll break some accounts if you're not careful. So you got to be two things. Number one, it's wonderful to be a chartist. I love it. But number two, there's a practicality. What can the client stand? If you're just saying, I'm going in, it doesn't matter, I have all the money, I can withstand that, the chart action's great, terrific. You're in that small percentage that can do it. I still don't see the setup to do anything. I have bullish bias. I've had a correction now taking place. The market is suddenly no longer overbought. I'm waiting for a setup to do what? Get long. Don't have it yet. Gold-silver ratio, look at how the prices snap back up and over the 18-day average. So what does that mean? It means that for the moment, again, gold is stronger than silver. This deal ended, and now resistance is up here, support's down here, and you're just marching back and forth. In the silver market, like the gold, overbought into the Bollinger Bands and kaboom, and notice how you just stopped at the 18-day average. I really don't think the market's got the power in it, I could be wrong, to get much through the 31.18 level and nosedive to 30. It could. Do I see a trend? No. Do I care? No. No interest in it. In the copper, the first move to the 100-day average in green and the upper Bollinger Band, and you were overbought. And just go back 2 days, look at the videos that we're doing together. I said, I'll let somebody else want to carry the risk there. I'm sure I said those words. And I'll stay with what I said. Is the trend up? It absolutely is. You'd have to take out 418 in order to break the uptrend. You're getting out, present tense of an overbought condition. Neither of the numbers are right now over 70. If we go back, though, they were on the close of business today. So tonight as they're opening, it's not going to attract people, I think, at a 69 reading. I'm going to look for support at that 419 level and see how it wants to do right there. Platinum's been fighting its battle at the 18-day average of closes. And today's action, not yesterday's, today's, gives you the lower highs and lower lows. But already, to get a sell signal here, you have a number under 30, which is oversold from my perspective in the market. Last but not least, the dollar staying right within the narrow confines of sideways Bollinger Bands. Very important. This is where the market builds power. For whatever it's going to do, this is the power mode. So if you ever watch F1 racing and they pull to the sides and they go very slow and they always get potential penalties if they get in somebody's way or too slow, this is where you're recharging the batteries now. And from there, you break out one way or the other. So we will see just what the market wants to do, but think of this in the recharge mode is probably the right way to do it. Now, if you like the way I explain this, you're going to love my morning videos because it's in those videos where I'm able to say, buy here, sell there, do this, do that. And that is the whole purpose of what this is about. My morning charts in my subscriber videos have a black background and all those lines on them. On our website in the member login, they're here. They're not pictures. They'll all be videos. And they're moving right through, and I'm talking to you each morning, covering 40 or more charts at a time with trade ideas. A lot of those ideas say do nothing. I see nothing there. I spent my morning today in the spider video pointing out how many charts were bearish, not bullish, to my investors and saying, this is not the stuff where you're coming in at this point to do much. So if you'd like to get the combination of what I do there, the 22 videos a month for each. For the futures, the spider, I include weekend videos in that 22 apiece where I just look at the weekly charts and then refer back to daily. But otherwise, it's going to be daily charts referring to the weekly chart from time to time, specific ideas, and tracking of them as we put them out right on the website for you to see. So if you're interested in that, it's in the video actually where I track all this. So it's anything that I tell you, hey, buy this, sell that, I track it until you're out of that. So I hope you like that. Just go to iraepstein.com research, take a look, you'll see everything explained. We hope you sign up and join us. You take care.